Hello, this is Mike Swanson of the website wallstreetwinner.com. I got a very special guest with me today. I'm speaking with Kenneth Ademuri, who runs the website Crush the Street. He's the president and the chief editor of the website. How you doing today?
Great, Mike. It's great to be on with you.
Well, thanks for taking the time to talk with me and my listeners. We've had some interesting things happen in the stock market this year. Of course, we had Donald Trump win and the Dow charged up to 20,000. But one of the things I find curious is there hasn't been much volatility in the market. I just read an article this morning that said that we've seen 80 days without the S&P 500 falling more than 1% a day, and but it's like I've never seen that before. And bullish people are saying it means everything's good, we're good to go, we're just going to go higher, and it means pretty much pullbacks have been abolished with Fed action and Trump's leadership. While bears are saying, "Oh, that's scary, and that means it's all going to crash any second." So here's what are your thoughts?
Well, Mike, it is interesting out there because really investors are getting very bullish, and you can see that with the put to call options ratio. This is the lowest it's been in a very long time. But the reality is we're trading at debt to income ratios with companies on Wall Street at the highest levels they've been in history by some metrics. And it just doesn't make sense. It's irrational exuberance to the max here. And I understand to a certain degree that people are optimistic about Trump. He's actually addressing things that people want addressed. And he's talking about really bringing manufacturing back to the country. America first for a change. And, that's inspiring a lot of people. And that's the truth. But it is amazing that we are at record levels in the stock market, but yet people are more bullish now than they were when, say, the Dow Jones was at 14,000 and the S&P was at 1,400. And they're looking at these valuations going, hey, I like stocks now more than I did when these valuations were so much lower. And, really it's because of low interest rates, ultra low interest rates that have forced people, scared people into thinking that the market is the only place to get a decent return. And quite frankly, it has been one of the only places to get a decent return. But how long can that go? And think about the average retiree who was once able to retire on, let's say, $1 million and get, a 7-8% return, and make $70,000-$80,000 a year conservatively, or maybe it was only a 5% return conservatively. Make $50,000 a year off of $1 million. Now you got to have 4 times that amount of money, 4 or 5 times that amount of money to actually get some decent return out there with maybe something that is quote unquote a conservative investment. But of course, you got to deal with potential inflation and a bunch of other things out there. So it's such a difficult spot to be in, and unfortunately the average person is blinded by all of this. And even though I like Trump, there's a lot of things I like about him, I think that the market is a very rough place to be putting your money right now.
Well, one thing about the market, you talked about, the returns people used to expect and now really have to fight for. But, when the market did finally break out and rally after Trump's election, it had spent like 2 years doing absolutely nothing. It ended the year up like 9% on the S&P 500, but it was only like up 7% over the past 24 months or 36 months, actually. So it's tough, and I think people finally felt some relief to see their accounts, or the market at least, make new highs and think, well, now it can really begin again and I can get rich again finally.
No doubt. And you know what? Honestly, I'm not rooting or cheering for the market to go down. I'm just, being honest in what I personally believe. And when you look at it as a whole, since 2009, I mean, we've had this historic bull market. If you look at it as a whole, counting that 24-month period, I mean, it really does look like we're at that blow-off top period where all bubbles ultimately go into. People just get so exuberant, so excited, and just pour in to whatever asset they have on their mind. It's gold or Bitcoin or anything, stocks in the .com era. It experiences that last rush, and unfortunately, I think we're getting awfully close to when things massively correct.
Well, you mentioned other places people can invest in, such as Bitcoin and gold. Last year, gold had a good year. It's doing well this year. The gold stocks, the GDX ETF, was up over 50% last year. It's actually the top gaining sector so far this year too, gold and silver stocks. What are your thoughts on them? Do you think they can be a good place for people, or do you think they've gone up too much?
I like gold and silver a lot. I love precious metals. And when you consider how much they've come off their 2011 highs and, the reverse, what we were just talking about, stocks being at their all-time highs, really there's this inverse opportunity where you can allocate or more heavily allocate your wealth into this area that is significantly undervalued. Just going back to their 2011 highs would give investors tremendous gains. And if you want that leveraged upside, you got to start looking at the miners. If silver and gold see 100% move, believe me, you're going to see some of these mining stocks go 10 or 20 times up from where they are now. And I wholeheartedly believe in that. And look, I mean, the fact is, once you start adding in manipulation and all of the other things that are out there, I mean, precious metals have a much greater chance of going up significantly more than just 100%. But that's just being conservative, in my opinion, over the next 3 to 5 years.
Well, there's lots of, at the moment, I read all kinds of people, and, we saw gold, of course, it went up a lot last year, but it also had a pretty steep correction from the summer until December, and now we're rallying back up around 1230 on gold at this moment. But a lot of people are scared. Many people are predicting a retest of lows or a fall to 1,000 first before it can go higher, or others are saying it can just keep going up from here. So with all these different predictions, it's hard to know what to do. So what do you think people should? What are you doing with gold?
Sure. I'm not selling anything at the moment. I don't day trade. I believe that we're in an inevitable uptrend, whether or not we test the lows. I believe that silver and gold are destined to go higher here over the next 3 to 5 years based on certain fundamentals. I mean, silver specifically, look at what, we have Trump in the White House, and his policies are going to be inflationary. He's talking about a weak dollar policy. He's threatening countries around the world, telling them, hey, you're manipulating your currency. We, as a country, need a weaker dollar, and that has been good for gold since the 2017 has started, gold and silver. And then you have the fact that he wants to spend $1 trillion on the infrastructure. That's the industrial side, and that's what silver has. The components of the industrial aspects that are going to benefit, from the monetary side and the industrial side of things. I think this is a great spot to be. And with that, I mean, who knows how much higher the stocks go from here at actual equities. But in terms of upside potential, you got to be looking at the precious metals. And, I can't emphasize that enough.
Yeah, I mean, whenever you make an investment, you do have to think about what's the risk to what you can potentially gain in it. And, as you mentioned, the stock market, its bull market started in 2009. This is 8 years later, and the gold stocks just started one last year, so we're early in the game with them. I like to get in early in something instead of at the end, as you mentioned. People want to buy now with the Dow at 20,000 instead of the Dow at 14,000, and think gold's kind of the same thing. This is
Absolutely.
cheap time to buy, regardless of where it's going to go. But
well, and it's sad because we all fall prey to the markets, and we all fall prey to the fact when prices are going up, we want to jump in on that. There's that fear of missing out, and when prices are getting slammed, such as what we've seen with precious metals. You have that recent memory of losing money, and it makes it that much harder to something that is going down, and everybody suffers from that. That's just the way it is. But you have to overcome these emotions and not let the market steamroll you, because that's the markets tend to win, and that's one thing. Especially novice investors. They think they can outsmart the market, and a lot of people missed out on the upswing that we saw in the overall equities. Why was that? In 2008, 2009, everything was getting smashed. Most people didn't start buying stocks to a large degree until 2013, after they've come up, almost 100%. So, it's just one of those things. You really have to try to overcome these market emotions and invest with fundamentals. And with that, you can't be all in on one thing. Set yourself up to really have a good chance of prospering through multiple outcomes, because anyone that tells you they know exactly what's going to happen over the next 12 months, I would tell you to run from that person.
Well, I think it sounds to me then like one of the things that you do is divide your money up into certain trends or markets as a way to bet on multiple things. And most people don't do that. They just are all in on one trend, and then it ends up biting them at some point. So am I right in that assumption? That's what you're doing?
Absolutely. Hey, and to be honest with you, I own some overall general equities. And even though I'm bearish on these, I still have exposure to upside with the overall stock market. But like I said, I'm over allocating into areas I believe are very undervalued. One of these areas is precious metals. You know what? Marijuana, believe it or not, is a very, very hot trend right now. When with California opening up the floodgates by legalizing it, this is really like investing in a trend, like the tobacco or alcohol trend in 1930s. This is something that's going to be in grocery stores and 7-Elevens. This is just the tip of the iceberg of what we're seeing. And now that California has done it, this is going to be a global industry, and we're just tipping the iceberg on that. So. Marijuana is an area I'm taking a strong look at. Uranium. It's a mining sector pick, but uranium has just been in this depressed bear market and has totally missed the bull market of 2016 that precious metals and base metals saw. Uranium still is down, and it really does feel like an oil $26 moment in uranium. And, with supply, with demand outstripping supply here in 2019 and all these nuclear reactors that they're building in China and India, uranium is a bottom play pick that you really got to take some notice towards and focus on, because honestly, this could be, again, it's about buying something that has the most amount of upside potential and not buying something that has ran already a whole bunch and watching it crash down on you because you allowed market emotion to make you make a stupid decision.
Well, I know we've taken a lot of your time. So as we wrap up, could you tell people who are listening that if they're wondering, how do I get more involved and learn more about these type of investment techniques with your material, where can they go to do that? What do you offer?
Well, actually, on our website, you can visit my work. I mean, we have some political discussions there. We talk about precious metals and some of these different investing trends. We're actually releasing a report for 2017, a couple different reports for the trends that we see as the hottest trends. You can actually pick that up at crushthestreet.com/prosper for 2017 for some crucial investing trends. And honestly, if I was to give advice to people, try not to get too worked up over all the news, but be prudent. Wake up each day, focus on your skill sets, focus on ways that you can be more value to your employer, your customers, and save your money. And I pay off debts. Do these things first, and then start investing. Because if you don't have these basic grounds covered, you're going to have a really hard time trying to throw your money at things. And if you don't do it right, you might be wishing you just stayed out of the market completely. So cover your bases first, and then get into these market trends. And I'd love to have some of your guests visit some of my work at Crush the Street. So.
Well, great. And that's wonderful advice people need to hear, definitely. Well, thanks for taking the time to talk with me and everyone else, and we'll do interviews in the future whenever you're ready.
Thanks, Mike. Really appreciate it.